Dumb dollar selling. Is it going to continue? Let's break everything down. Listen up, if you don't know how to make money in these markets on a macro level, you are already falling fast behind and things are only going to get worse. Markets are set for drastic changes, which I've been warning about as we enter a new phase of part of market cycles. Now, while most people are panicking, those with macro edge are ready to capitalize. So my virtual fundamental bootcamp, which is taking place between the 4th and 7th of November, is going to be giving you a chance to learn how to actually trade and capitalize with the use of macroeconomics. Now, it may be overwhelming, but everything that I teach is absolutely broken down and simplified and actionable for the everyday person. And regardless of how you approach the markets on a technical level, what I will show you and demonstrate will go hand in hand and give you a macro edge for how you approach the markets. Now, the bootcamp will be made up of daily interactive lectures where we'll be going over theory, but also past and real-time market events and trading scenarios. Everything that I teach is applicable across all asset classes: forex, stocks, indices, commodities, gold, crypto, you name it. Space, of course, are going to be limited because we do want to keep this as intimate as possible. You can check out the full details and to register your interest below. Otherwise, I look forward to seeing you there. Morning, 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 baby. Happy Wednesday. I hope we're all well and truly lit. Yes, we're back with another day in these beautiful markets. Guys, just jump straight into the rundown. Yesterday, you would have seen there's quite a lot of risk appetite in the markets, right? Stocks continue to rally. Riskier currencies, we had a push to the upside. Dollar still coming under pressure. And there was risk appetite because it was on the back of China, announcing this biggest stimulus package, trying to revive the economy, the biggest stimulus package since the pandemic, by really lowering borrowing costs across the board, trying to promote, spending, this package. And, obviously for me personally, as part of my recession analysis, I have a lot of concerns around the second largest economy in the world, i.e. China. Obviously, Eurozone's there and other economies as well, which I'm putting things together. But China and Eurozone are ones that are really, really red flagging for me. But if obviously we focus on China right now, just quickly digest this theory. China, for a long time, we've seen it, right, in recent data, are suffering with deflation. Prices of goods and services are coming down, 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 down. And then you have to think from a macro perspective, why are prices of goods and services coming down? Because people are reluctant to want to spend. Now, just because the Chinese authorities here have come and introduced, the stimulus in terms of really lowering borrowing costs across the board, that's not going to have help the underlying issue. That's not going to provide sustainability, in my opinion, because the real issue is Chinese people, individuals, and also businesses are largely reluctant to want to take on more debt. So just by introducing this stimulus package with large focus on bringing down borrowing costs, I don't think that's going to be enough to still be like, oh yeah, I'm going to go and take on some more debt. I'm going to go and take on some more debt so I'm going to spend. No, there's an underlying issue there. Okay. And it's mainly due to, remember with China, we've spoken about this before previous months ago when we had that, China's biggest property developer, Evergrande, who were going under, and how, the Chinese property market is on the down, largely on the down. Okay. And, at the end of the day, to invest in property, to buy property, of course, most people will need to take out loans for that, right? And, people, as I said, are reluctant to take on more debt. So the property market is, as a result, suffering, a large part of the Chinese economy. So even the fact that we've got a lower borrow costs, I still think there's going to be large reluctance there from people to want to go out and take out these debts to go and buy houses or whatever the case may be. There's a deeper issue there, which is, as I say, is going to take some sort of drastic action, whether, the government look at, trying to lower, state bills, or try and introduce massive, tax cuts of some sort. They really got to take some serious action. I don't think this is going to be enough just lowering rates in a nutshell. So, I still think that we're going to have this continued issue of this property crisis in China, which is bad because it's a big part of their economy and also these risks of deflation. Now, right now, as I say, that's having a negative impact on the dollar because it's brought, again, how I always say about, I've got this thing right now. Okay, I've got this thing right now where markets are just lying to themselves. They're lying. Wake the fuck up. They're just blanketing everything. They're seeing things at the surface level, but they're not seeing the roots. They're not seeing the roots, and at the roots, things are rotting, rotting, and they're going to rise to the surface and everything's just going to rot, mass rotting. Oh, it's so true though. Okay. Where else I go with this point? I lost myself with that. Yeah, so what I was saying is at the moment, obviously, people seeing things at the surface level that promoted a lot of risk appetite. People are like excited, yeah, this is bringing on risk appetite. Let's continue to sell dollar as a safe haven. Let's buy out stocks. We're just ignoring all the facts. So this is where the bubble will burst even harder, and there'll be so much blood. Anyway, back to the point. So the dollar's under pressure right now. We said this was going to be the case. Obviously, you've been going over this for a long time. I said the dollar near term remains vulnerable, but we are in this final cycle, this final stage of selling. Okay, I did say that we're in the final stages. So just this one potential last wave right now. When you look here, obviously we've been going over this structurally. We're very much to the downside. We're likely to test these 2023 lows. Okay, just sub 100 around sort of 99.90 towards 90.50, that range. You can see that there, lows of 2023. And we've just been respecting structure, printing lower highs, lower lows. We formed this recent flag as part of this consolidation from back end of August all the way to obviously this late part of September. We had that breakout there yesterday. Okay, we had a breakout there yesterday and just watching for potential retests on this range for possible rejections. Okay, and maybe we see this. Obviously, I've got a couple of scenarios where that the bull momentum comes into play at those 2023 lows, or it may come in a little bit later. Okay, it's all a matter of timing. It's not if, it's when. Okay, and when it comes, it's going to be fast. The dollar bull momentum is going to be fast and harsh. So you better have your finger on the pulse with me. I've got my finger on the pulse ready, and there's a number of signs and indicators that we can look at, which I'll go into in a moment because I'm just later on. It's just that I'm already blabbering on right now, and I'm going to save that. But I want to jump over to CME Group, and let's just talk about rate cut pricing for November. If you look at rate cut pricing now for November, it's now a 60% probability that they're going to be cutting, by 50 basis points. Markets pricing in only 40% of a 25 basis point rate cut. 60% probability. That's really, really jumping up there. Markets are ramping up their rate cut bets there. And if you look yesterday on the data front, we had let's get it up here, US consumer confidence. So the consumer in the latest readings, not confident, dropping below that 100 mark to 98.7. Previous though was revised higher to 105.6, but consumers are seemingly getting less confident, which is probably not helping things as such there. Remember, consumers are a big part of the economy. So right now, it's just the dollar's just near-term vulnerable. I cannot continue to stress that enough. Right now, we are just near-term vulnerable, subject to all surface level trading. This is all surface level trading. Oh, the FOMC just cut by 50 basis points. Sell dollar. Oh, we're going to start pricing in more rate cuts for 50 basis points. Yes, that's more dollar weakness. But we don't realize that if we're cutting again by 50 basis points, that is an emergency, economic downturn. The dollar bulls will revive because it's not just the United States that's really slowing down here. There's other major economies, China, Eurozone, that are worse. Let's just a quick recap again. On Monday, look at European manufacturing PMIs. Why the frick are we ignoring this? Why is Euro allowed to still be up at around the 112 territory? It has no right. It's just that markets are trading at the surface level with this dollar weakness, with this focus on this dollar weakness. That is it. You look at these PMIs. Awful. Bad. This is problems. Okay. So give the dollar time. It will revive. But right now, we have to be with the narrow-minded markets and just trade at the surface level. But be ready. Finger on the pulse. Okay? Because we watch. Anyway, carrying on. Let's take a look. Let's take a look at Euro and things. See what trade ideas we've got going on at the moment. Let's jump up to Euro. Guys, as always, I hope you found value in today's video. As I've already noted, there is going to be a macro virtual bootcamp taking place from the 4th to the 7th of November. If you are interested in being opened up to how to trade on a macro level, it doesn't matter if you've got any experience or not. I've taken all of my experience and I've put it into this fundamental bootcamp. Our previous one was extremely successful. I simplify everything and make it actionable and effective for the everyday person. And it doesn't matter how you approach the markets on a technical level, it doesn't matter. What I teach you on a macro level will go hand in hand with how you approach that and give you the strong macro edge. And as I already said, while everyone's ready panicking about this economic bust that's coming in, those with macro edge are ready to capitalize. Okay, so if you are interested, check the description below. The full breakdown and details I've been posted also via the Discord. Other than that, stay lit, stay blessed, and let's get it.